Welcome, everyone, to the Banking Revolution, a Financial Times event in partnership with Mambu. I'm Liz Lumley, Deputy Editor at The Banker. We are very excited to be returning for the second year in a row, and we look forward to engaging with you from wherever you are in the globe. Throughout this event, we'll be seeking to answer a number of questions. How can banking be redefined to ensure that it works for all? Are the unbanked being left behind on this transition to digital? And why do SMEs continue to be underserved by the financial system? We are live, so we would love for you to share your thoughts and tweets on social media using the hashtag Banking Revolution. And you can also submit your questions throughout the day using the Q&A box on the right-hand side of your screen. Please make your questions short, relevant, to the point, and more importantly, a question, and that you will be more likely to be read on air. So to kick us off with our opening fireside chat keynote, joining me is Werner Knoblich, Chief Revenue Officer, the Chief Revenue Officer at Mambu. Werner, hello, welcome.
Hi, Liz. Welcome as well. I don't have the fire behind me. Okay, so I would love to have a fireside chat with you. So we make a virtual fireside chat.
Thank you so much. I know a lot of people saying, no, we need to have a little, yes, we should have a little virtual fireplace behind us, but we can feel the warmth from here online. So
Exactly.
I wanted to kick off a little bit. I'm giving you kind of an open question. There's some big changes taking place in the banking industry right now. What are some of them?
Yeah, I think it's very clear that on one side we saw a clear actually decline in the issuing of new banking licenses, and also with this, there actually also is a less risk capital available, for the whole, fintech space, due to the
Mm,
macroeconomic, environment. On the other side, we clearly see that the large incumbent banks are obviously so increasing interest rates, are much better,
mm,
actually in much better shape than before, and they start to now actually issuing more and more their own, spinning up their own digital banks and actually moving in some or becoming fintechs themselves. So it's quite interesting. On the classic fintechs don't have enough money, not enough banking licenses, and the incumbents are kind of not completely taking the space, but stepping into that direction. I think that's a clear trend, which is right now reality.
Yeah, it's interesting to see that interconnected ecosystem of the incumbent banks and the new fintechs and how they kind of fit and grow together. I'm really interested to know
Yeah.
the specific changes. You mentioned interest rates, for example, that have happened in the past year. What are some of them?
I think what clearly accelerated in the last year is that banks, I think, really came to realization we must do something, meaning we must move much, much faster away from our legacy systems to be able to serve at the end the demands from the customers, because I think it's very clear that the demands from the customers has changed, and has changed most likely also due to some of the situation we're in the last couple of years, meaning the
Mm,
last 2 years and a half we have been in a pandemic. Okay, so clearly the banks see a much more need to accelerate, to accelerate the move away from the legacy systems, and they clearly see the need for, they have to be more agile and serve much better the demand from the customers, which they're clearly not doing right now.
mm. I'm glad you mentioned the pandemic because there's a phrase that I kind of a little cynically get really don't like hearing, which people get on panels like this and events like this and say the COVID pandemic accelerated a lot of these changes that we're seeing right now. And we all know that the financial services industry, the banking industry, has been going through a lot of change for a number of years. And of course, the pandemic has. I want to know, kind of get a grasp of what the measurement of that acceleration. How many years have we shaved off in that move to digital? So like by how much has the pandemic actually accelerated what this industry's been going through for the
I,
past
I, I
decade?
I cannot say really how many years it shaved off, but for sure it accelerated, dramatically. It's just that the people, for whatever reason, they are now became much more sensitive to what is happening with their money, I think, compared to before. I'm not sure if this was driven because people were sitting up purely at home, had more time, even though I think I had less time sitting at home, being in front of the screen. Um, but there has been, I think, much more sensitivity around what is happening, with my money. And with this, obviously, they also created a much more demand. Okay, where, for example, wealth management, is clearly an area which is increasing because people are much more, again, sensitive to what's happening with their money. They don't want to have it just, for zero interest on their whatever checking or deposit account. Okay, hopefully, or right now maybe the interest rates are increasing, and that this situation improves again. But they obviously wanted to do something. They were much more sensitive, and I think this then again generates new demand. And with this, obviously, the banks and the financial services, institutions need to find a way to serve this this demand. And from this, really, the acceleration of saying we have to be much faster in delivering digital services to our customers, it just keeps increasing. I think it was ignored a little bit before. Everybody had already knew, oh, we have to become more digital and we have to deliver more
Mm,
services, but nobody kind of took it maybe serious enough, or not enough banks took it serious enough. Okay, and I think that's clearly what the pandemic, I think helped with that. Everybody knows it's not a question of if we are doing this, it's just when. And I think this when is becoming closer and closer, because the pressure is just increasing dramatically on everybody. Again, and we all know the loyalty is to an incumbent bank is rather declining than increasing.
mm. I mean, I'm glad you talked about, the technology that kind of surrounded us as we all sat home during lockdown, and fortunately, a lot of us were able to continue to do our jobs with Zoom and the internet and our computers. But a lot of the technological changes that are affecting consumers' behavior, come from other industries, come from dealing with, shopping and online and your children's school. How is the banking sector really keeping pace with the development of all of these technologies that surround our lives? You said they kind of maybe ignored it for a bit, but obviously banks can't ignore it now. How are they keeping pace?
I think very clearly not fast enough.
Mm,
I think it's very obvious. And the reality is just that the legacy migrations, are just so difficult, and the legacy situations the big banks got themselves into, kind of they built up monsters over decades. Okay, and these monsters which they have in their kind of in their basement, in their data center, or wherever it is running, are so kind of inflexible and so kind of difficult to adapt and to deliver something new, that it's, again, this is where I can clearly say it's just not fast enough. Okay, and they really
mm,
come to realization, we cannot easily migrate, this kind of gigantic monolith which really literally got built up over many decades, to a new system. So we much more need to start partially more like in a speed projects perspective, with new standalone, offerings, which was very interesting.
mm,
I had not too long ago with a discussion with one of the largest banks actually in the world, a Fortune 20 bank in the world. And they will put the demand on us to say, can we put into the contract we are signing with you that we are not allowed to customize the software? Okay, where then I was a little bit surprised that actually we don't need to put this in the contract, because in the Mambu world that's not even possible, because we have a single code base which is the same for every customer in the world. It's a SaaS service, so our 200 plus customers using exactly the same code base, but they try to protect themselves to not fall into the same trap as they have done in the past, because they obviously have a lot of IT resources, these big banks, and they love technology, and they love to play with it and build this whistle and this bell and create complete snowflakes. And then at the end, over years, they create monsters. Okay. And
mm,
that's the reality what we have. And that's where this kind of lack of speed, lack of kind of agility comes from. And now the big question is, how do they best get out of it? Okay. A mass
mm,
migration it will take decades probably, and it will be, a setup for failure from the beginning. So they need to see how can they chip away, one service after the other and spin it up in a modern new environment to then drive agility and, give their people, their product managers, kind of the tools in their
mhm,
hands that they can create their own products without needing an IT person or developer to create a new offering. Because you want to have
mm.
the kind of the front office kind of in a bank, or you want to have the, the administrators from the product managers, develop their own solutions, without requiring, a developer to create these products.
I love that term, and I want to go for a follow-up question with you about this banks creating these special snowflakes, creating these customized product. Like, how prevalent is that? How big of a danger is that to the speed and the agility that the financial services industry desperately needs to adopt going forward?
It is a gigantic danger. It's not just
Mm,
within the banking industry itself. Kind of IT as an industry has built up so much technical depths, literally over decades. Okay, and especially again the large organizations with again the banks, the insurance companies, and so on, who have partially tens of thousands of people just employed within their IT department. Okay, where they just created these kind of superbly customized, environments, and on top of it, developed often still maybe on the mainframe, written in languages where you have barely people around anymore who have the skills to even, to make any changes. Okay, so it is just it naturally grew into that environment, and now the only way to really get out of it, you have to make a complete paradigm shift. Okay, and that's where also the move to cloud, getting into a SaaS service, okay, which gets delivered as a service in the cloud, kind of on a worldwide basis, where the entry hurdles and the speed, the time to market is much faster, and also the capabilities to kind of to customize it in the sense of creating your own version of it is kind of not there. You obviously want to configure the solution so that it's kind of to your, to your branding, then obviously also the way you want to offer a certain products, but not doing this via creating your own version of the software by doing your own coding. Okay, and I think this is the
mm,
key. And obviously, if when you do this in the right architecture and the right environment, as example, what we as Mambu, again, we're offering this as a pure SaaS service. Everything is managed by us. All the customers have the same code base. When we make a change and we do new coding, it gets pushed twice a week to our 200 plus customers, to everybody, not just to one.
mm,
So you don't even have a chance to suddenly build your own fork. And again, that's what happened. Even banks who bought off the shelf software. Okay, obviously you have many who built their own core banking application out of because they could, and there was nothing available on the market which suited their needs. So they built their own. This is one camp. But then you also had already banks who choose kind of a core banking or banking applications off the shelf from the market, but then they customized the hell out of this off the shelf, and then it was not anymore any like the off the shelf. It became also like there was a complete homegrown solution with all their technical depths, which comes with it, and then all the negative, attributes of you're not flexible, you're not fast, and it's very tough to migrate, you're always on old releases, and so on. And you only can break
interesting.
out of this, make a paradigm shift.
So interesting. So we've talked about build, and I wanted to move on to buy. We have a question from the audience about the impact of M&A activity. It's very interesting. The news this morning was that HSBC bought a 35% stake in fintech company Monies. And so what do you think this M&A activity and going out and buying this, what impact is that having on the industry and how banks serve their customers?
Yeah, that actually this exactly underlines what I answered in the first question, that the fintechs get on one side less funding, but now the incumbents kind of move into that space. Like HSBC taking a 35% share in this fintech. I think it clearly demonstrates that they're all looking for ways to break out of this kind of situation, kind of stalemate situation they are in, by either again creating their own complete digital arms and banks, or acquiring obviously technology which is on the market to much better serve the needs, for of the customers. Okay, so I think that's kind of the good news, because it's now probably filling the gap of the less risk capital and the less whatever banking licenses, so that the incumbents fill this gap, because there's clearly a need in the market. Okay, and I think it's now the opportunity for the incumbents to also faster catch up in that space.
Mm. So, I mean, I've got a question that I feel very passionate about is we talk a lot about moving to digital and offering products that serve a wide range of banking customers, but usually sometimes the unbanked and the underbanked tend to be left behind as this move to digital. What more can be done to make sure that doesn't happen?
Yeah. First of all, I love this question because the unbanked people were the reasons for Eugene and his two, friends founded Mambu 12 years ago. They wanted to bring banking to the unbanked people, okay? And then in addition, we want to make the, banking experience or financial services experiences delightful. So really bringing banking to, to unbanked and again making it more delightful as an experience. But clearly, what needs to happen is, I think it starts with the regulator. The entry hurdles for fintechs to get into a market or the entry hurdles also to get banking license and so on need to get reduced, okay, so that we get much more modern technology much easier into the world. Okay, I think that's the what clearly needs to happen, that they are the entry hurdles need to get reduced. I think that's the only way to ensure that the unbanked are not staying behind, because obviously there you need a lot of micro loan offerings, where people, in certain countries they finance everything because they don't have money. Okay, so they need to have easy access, to functionality like microloans. Okay, not everybody has a passport to identify themselves if this is a requirement. Okay, so I think there's many ways, many things which clearly the regulators can do to reduce these entry barriers for fintechs, which then exactly serve that market.
Mm. Okay, so we've got a few more minutes left, and we've got another question from the audience, which is interesting. As you know, a long time ago, when I was speaking to banks, they wouldn't even mention the word cloud inside the building. There was a lot of risk and compliance issues, and now most banks are moving, and of course, into cloud technologies. But how do you deal with risk and compliance and KYC and AML requirements in a cloud environment? This is a question from our audience.
I think at the end, the cloud environment doesn't change anything from the core functionality of whatever software, kind of the onboarding or the, the know your customer or the, anti money laundering or whatever functionality you have, within your software. It only just changes the setup in the sense of how is it run, where does the data reside, okay? But obviously, there, all the cloud providers, the big ones, more and more have data centers in all the majority in the big countries in the world. So when data residency, sovereignty is an issue, is a topic, it's not an issue anymore, okay, because it's there.
Mhm.
Okay, when it comes down to security, let's say that's more a personal comment, but I'm pretty convinced that the Amazons, Google, Microsofts, and so on of the world, have a stronger security or have stronger security expertise than the IT departments of many of the customers, or I would say of close to all of the customers. So I think this is more sometimes a gut feeling. Oh, the data is not with me. I don't own it. It's more like I don't have a good feeling. But I think reality is that security is most likely handled by these big providers in actually much more a better way, because the biggest security risk is mostly is the human being, and it's not the
Mm.
technology itself. Okay. And I think there it is still, for some it is, they're still afraid, or they have their kind of some, again, a bad feeling with it. But this is changing dramatically, okay, because
Mhm.
I think there's just no other way anymore than doing things in at the end in the cloud. And if we
Mm.
have the same conversation in a couple of years, then I'm certain that I will be right.
In Google and Amazon, we trust then going forward. Wonderful, Werner. We've got a minute left, so I'm gonna wrap it up. But this has been a very interesting conversation. Thank you so much for kicking off the banking revolution for us. Thank you, Werner.
Thank you very much, Liz, for having me. Take care.